Cool. How are we doing, everybody? So, nice to see you all again. Let's have a little chat about kind of what's expected in terms of data this week. Obviously, if you remember from last week, we did speak about a bit on the UK, a bit on the pound. You know, we were talking a little bit of, we might see a bit of pound strength in the interim, similar for New Zealand as well. We saw a bit of hawkish RBNZ. So we're going to talk a bit on kind of the Fed meeting next week. Now, for those who are new here, welcome. I've seen some people in the chat say that you are new, so it's nice to see you. Let's just run through the calendar and we'll have a little look as to what we've got going on. And as you know, I always like to show other examples out there as well about what other people are also talking about. So let's start off with this one over here. So let me quickly make sure this is open correctly. And it seems as if it is. So yeah, let's get straight into the breakdown. Obviously, this week, what is expected to happen? I mean, let's quickly have a little look. So, apologies if it looks a little bit weird with the colors. My whole PC is in like dark mode at the moment, and also websites, just because obviously it's easier on the eyes. So let's have a little look. Monday. So what did we have on Monday? UEDA. Now you might have seen, if you look at dollar yen, you might have seen, right, that we saw a lot of yen strength on Monday. Why was that? Well, I always teach people, and I always sort of tell people the best way to understand, right, if something new is going to happen or if a trade is going to continue in your direction, is just to think, what was the reason it was so weak in the first place? Now, obviously, there was a little bit of a delay in between, obviously, like a stream delay. But if you let me know, what do you think the reason why the yen has been so weak? Why has it, if I go on the daily time frame, why has it been trading higher and higher and higher and higher and higher, all the way to just before 158? Why did that happen? And the best way to understand if there is going to be a change in direction is just think opposite to the reason the yen is so weak in the first place. So why do you believe, in your opinion, that the yen is so weak? Let's have a little look. So just think, if I just draw this up, why was it so weak here? And if you can understand why was it so weak there, you can understand the ... on how much more downside a currency has, or upside, obviously depends on the direction. But right now the yen is looking decent actually for a bit of downside, dollar yen downside. So let's see, why do you believe this is the case? And if you don't know, that's also fine. It's also best to put stuff in the chat, because it could be beneficial for everybody. And I'll try and talk up on certain points as to why it might not be that, why it could be something else. And we'll use that as a sort of a gauge for overall thought process. Maybe it's just a retracement. So this is actually a good point. Retracement, yes, possibly. But a retracement or a pullback always happens for a reason, right? Markets will use reasoning for pullbacks. Meaning, if you go, let's go on the high time frame, and we see these moves here, right? You see a nice big push on this bit over here, which is right here. This nice big bullish daily time frame push. And then we have 1, 2, 3, 4, 5, 6, 7, 8 bearish days within that sort of that little time frame there. There's a reason why that happens. And what you have to understand, or what you have to try and understand, of course, is what was the reason, and does that change the overall direction? Let's say you're bullish because of X, Y, and Z fundamentals. You might think, what is the reason for this big sell-off? Is it something that's sustainable? And if it's not sustainable, then yes, it's going to be a retracement. But if it, in your opinion, it isn't sustainable and it could change the whole trend, that's when you see like those, even though it might have trended higher in the daily time frame, that's when you start to see those big breaker structures to the downside. So you as a trader, you have to figure out what is the reason why it has happened. And in your opinion, do you feel like this is now a change in trend? And if you just go all the way back in history, all these pullbacks we've seen, right? So let's say it was bullish in this time frame here, this big sort of daily bearish time frame here, this sort of daily bullish price action there, all happen for reasons. It doesn't just happen. So if you figure out as a trader what is the reason, then you can figure out how much more the pullback has left. So slow growth and GDP is in contraction. Yeah, I mean, the growth prospect, possibly. I mean, the growth in Japan has slowed down a tad. GDP-wise, I haven't looked at Japan's GDP for a minute, to be honest with you. And the reason for that is because it's not really the main driver for the yen. Rate hike delay, that is correct, as well as new prime minister, also correct. So both of those are pretty intertwined with each other. The reason for that is because Takaichi, who is the prime minister of Japan, she has basically been sort of insinuating that there's going to be less rate hikes than initially thought. As a result, people are like, well, why are we going to be buying a currency or the yen when there's not rate hikes expected in the future or hawkishness expected in the future? As a result, the yen continued to trade lower or dollar yen higher and higher. And then obviously, as you probably are aware, during that period, we saw like a lot of speeches from the MOF, who, by the way, has the ability to intervene and strengthen a currency artificially by creating demand for it. So now that we understand why the currency weakened or dollar yen pushed, the yen weakened, now let's think opposite. So that's the best way to figure out, is a change in direction expected to happen in the future? And let's now think opposite. Why would the yen strengthen? Well, number one, let me just get my little text box out. Number one, you think, why was it so weak in the first place? Oh, place. Then think opposite. So then think opposite. So then you think, okay, well, if the yen is weak because of dovish prime minister, PM, less rate hikes, i.e. raising rates, that's obviously bearish for the yen. Well, as you can probably see, as we saw on Monday, Ueda insinuated, basically suggested that rate hikes could happen in December. Well, that's kind of that's completely opposite, right, to the reason why the yen was so weak in the first place. And that's why we've seen continuous yen strength, obviously, as well as we've seen a bit of lower bond yields as well, which is obviously a contribution to stronger yen. But that was one of the main reasons. So markets now think, oh, maybe the PM isn't as dovish. And these are the questions we ask now. So what you do is you then remain bullish the yen until otherwise. You remain bullish until opposite as to why the yen was so strong in the first place. So let's say, I don't know, at the next meeting, they raise interest rates, but then they're now suddenly dovish for some reason. The yen will go back to being weaker. And you just flip-flop between what is the reason it's so strong, just think opposite, and vice versa, really. Why is it so weak? And just think opposite to that, just basically night and day opposite. And that's when you'd start to go bullish a currency. So that's the best way, in my opinion, as to how you would figure out whether or not a big move is going to happen or not in the future. So that's basically what Wade has said. He did say some hawkish stuff as well. Let's have a little look. It was over here, wasn't it? And if I scroll down, just trying to double check and see. I know I did definitely see something on Monday about the BOJ. Here we go. And you can see on this Bloomberg article that was written on the first Monday, Ueda sends a clear hint at a chance of a December rate hike. Well, that, as we said, it's kind of opposite as to why the yen was so weak in the first place. Then, what do we have? ISM manufacturing PMIs. Now, it is technically a red folder or higher impact or tier 1, but it doesn't apply to the theme, right? Markets aren't focused on manufacturing PMIs when they're trying to figure out what the dollar is going to do, right? They're going to look at employment data. Obviously, there is employment data in manufacturing PMIs, but it doesn't contribute too much. Whereas services, we do have a lot of services-based things in the US. So markets are a little bit more concerned about services. So ISM manufacturing, yeah, it did come a tad bit lower, but it hasn't got that much of a high impact feel, shall we say. Then Tuesday, what did we have? Powell didn't really mention anything there. We did have some inflation from Europe, basically kind of staying roughly the same. So overall, as you know, and as we've spoken about many times already, if markets haven't got something new to trade, then it's not going to trade it, all right? Markets move on new stuff. So if there's nothing new on inflation, you can't trade it. It's not tradable. Bailey, he didn't really say anything there, to be honest with you. Bowman as well, didn't see too much in that. Now today, what did we have? GDP from Australia did come in on the negative side. That's kind of why we saw a bit of AED weakness on the London Open, as you may have seen. Overall, though, I don't think it will change too much for the RBA. CPI from Switzerland. Does anybody know what would the main reason you're thinking about when you're trying to look at the Swiss? What do you think would be the reason? What are you going to be looking at? That's the question. And as we know, right now, you might have been seeing some news about the war in Ukraine, potentially having a bit of a ceasefire, some potential, good things ahead. And the beneficiaries of that is going to be Europe because of the regional aspect, and food prices can also come lower, I guess, in the future. And the people who are not going to benefit from that are risk-off currencies, which is the Swiss. And that's what a lot of people are looking at when they're trying to figure out how much more weakness the Swiss has, is just pairing stuff like Euro Swiss, where there's a pure divergence between positivity in Europe. Let's, remove all the fundamentals. Let's just look at the war. Hopefully, if we see some more positive updates on that, that's going to be very good for Euro. And the Swiss is not going to do too well because it thrives in an unsure environment. And if we're starting to see positivity, it doesn't do too well in that sort of environment. Then ADP. Now, we did see some ADP negative 32K. Now, ADP, people use that, right, to gauge what NFP is going to be like. So what they do, and what you generally see in a normal condition, obviously slightly different because we've had the lockdowns from the governments. But generally what you see, right, is you see jolts first in sort of the data of that week, on the first week of the month. You see jolts, you see ADP, you see initial jobless claims. You generally do see ISM services as well. And then after that, you see NFP. So what people do, right, is they have a rough gauge on how has jolts performed, how has ADP performed, how has the employment sector of this, which if I show you, it has data within it, how has that performed? And then they can have a rough gauge on whether or not NFP is going to print higher or lower. Obviously, it's not a given, because if it was that easy, everyone would be pretty much millionaires. But they use it as a rough gauge. Now, if we have a little look at what the last print did, 48.9. So basically, it's still in contraction territory. Not really the best of signs, to be honest with you, for ISM services. What else have we got here that we can consider? Prices as well did come in a little bit lower. So that may help CPI potentially coming out to come a tad bit lower. Obviously, there's more stuff to look at, but generally you just have a rough gauge. And that's mostly of the two things you're focusing on. New orders did drop as well, which can indicate less demand. You'd obviously have to dive a little bit more deeper into it. But markets will look at all of that and gauge, okay, maybe now there's a possibility that we see lower NFP in the on this week. So obviously what this does is it just adds to that narrative that is starting to build in the US, where now growth is starting to falter a bit. And as a result, the dollar remains weaker because it adds more rate cut expectations. And that's all you're doing. Let's have a little look. Are you long or short AED NZD? We'll talk about that soon, actually. There's a good article from Goldman Sachs, and we'll have a look at that. and they do make some good points on AUD NZD. Are you any advice for a beginner? Well, the best advice I could probably give, right? I'm trying to think of when I started. I would wish I was told what actually drives markets, right? And what actually drives markets is economics, data, market expectations, and obviously mindset as well, right? Mindset of what the data means. If people see that is terrible, people's mindset are going to be much less worse off, right? And you can obviously trade that expectation of what could happen based on that. I wish I was told that fundamentals was more important than I was told back then. I was told it wasn't important. In addition, the best way to do it is start off with the basics. So what you could do is as follows: work out what GDP is, work out what inflation is, work out what interest rates are. Then obviously that ties in with monetary policy. That's all you basically need to know when you look at fundamentals. Then after that, everything else is kind of extra nuggets on top. So I wish I did mostly this when I started off. I didn't do this until like over 2 years later. Bit unfortunate, but it is what it is. Everything happens for a reason, I guess. In addition, I would basically stick to one strategy. Obviously, you don't want to flip-flop between multiple strategies because it just does not make sense. You need to fully understand that strategy before trying to add on some extra bits and bobs. That's one of the big things I notice a lot of people do, is they always try and flip-flop. So they test like a strategy for like a couple of weeks and then, or maybe a month, and then say that it doesn't work, when in reality, the sample size of that is not big enough. You need to stick to one strategy. Try and understand as much as you can about said strategy. So that's what I wish I did. I always flip-flop between multiple ones. That's why, again, that's what I'm trying to recommend. Swiss economy is cooked, but their country is so strong, safe haven. Yes, that is correct. Can you please share somehow links of what resources you use to fetch related information to certain news? So here is a good way of doing it. Banks, right? Funds, whatever you want to call them. Funds, hedge funds, cool. They look at the same data as us. What do I mean by that? Well, they don't get a different NFP to print to us. They don't get a different CPI print to us. They don't get a different interest rate to us in terms of, oh, the Fed is cut by 25. They don't get anything different to us. All they do, right, and that they do a lot better than everybody else, is they interpret the data better. So what we want to do is just, number one, it doesn't really matter what website you use to get the data, but what you want to do is try and interpret the same. How do you do that? Well, what you need to do is fully understand what the data means. How does that happen? Obviously, you have to do a bit of research, a lot of Googling, I guess, but forward testing that as well is important. So how do we forward test? Basically try and apply that logic that you've learned onto live markets. If you don't want to trade it live, do it on a demo. Doesn't really matter. But what you want to try and do is forward test that. And eventually it will click. That's what I noticed for myself, right? Like I've said before, I'm not the smartest person, but I forward tested a lot. I tried to understand why it was happening the way it was happening. So that's how you do it. So data-wise, you can just use trading, Forex Factory. You can use Trading Economics, which is another website. It's also good for data as well. But what I noticed is a lot of people do fundamentals. They try and understand all of the data, when in reality, there's only a couple of data that markets actually care about. And that's, as a trader, you have to try and figure out. I can point you in the direction. All you think about is what the theme is, i.e. what is everyone talking about? And that tells you what data is important. Dollar goes down to 95. Let's have a little look. I'd like more dollar downside. And what we are trying to anticipate is this ... right? Where is the dollar going to go in the future? Is it, in your opinion, based on what we know, more likely to go higher or more likely to go lower? Well, based on what we're seeing, in my opinion, it points more to downside than upside. How do we interpret that onto technicals? Very, very simple. All you do then is you have your direction, which is, let's say, dollar downside. then you only look for supply zones. So if you're trading like dollar CAD, you only look for a supply zone. You don't look for demand zones because you're there at that point. It sounds cringy, right? But everybody says follow the trend. But then people take trades opposite to the trend. So you're kind of contradicting yourself. So what you want to do is take trades that make sense from a technical perspective. So what you're seeing is, let's say, break structures, technical or bearish technicals, lower lows and lower highs. So that's number one. And obviously number two, it also points fundamentally that direction. That is a best trade out there. And what do? Oh, let's say I'm selling dollar yen or dollar CAD, only look for supply zones. What do? You then continue to hold it if you're swinging it, or if you want to get in and then get out at the next low, like let's say here or here. And then you ask yourself, let's say it trades there and we start to pull it back. We ask ourselves this question: what is the reason why this is pulling back? And if it's not something that's sustainable, then you know it's only going to come into a supply zone again and then sell off to the next low, which will be at 97,600 and then 96,500, which is that low there. And then you zoom out more and look to your left, and then you've got all of these lows at 9,500. And that's all you're doing. That's all you're doing. Like, markets are obviously very complicated, right? But you can make them so much more easier by understanding why charts are moving the way they're doing, i.e. what is the driving force behind why that chart is moving. That's a good way to not destroy your mindset, shall we say. Let's have a little look at what else we got. So ISM services we've just looked at. Tomorrow we have unemployment claims. Now, with unemployment claims, it's a bit tricky because obviously it is weekly data, but let's say it rises, which, by the way, you probably are aware, higher the number the worse, because obviously you don't want people claiming for unemployment benefits in your economy. So what generally means, right? Let's say it rises from 219 or previously 216 to today, let's say 230 to 240. Markets are not really going to move on that because it's still within norm. Like the rough norm of PC or of unemployment claims is between 250 and about 220. Anywhere within there is normal data. So people don't question it when it sits in that normal range. It's only when we begin to creep above those ranges, let's say we come to 250, 260, 270, people begin to question, maybe this is not a good sign. So if let's say we rise a little bit, it's not really going to do too much already. People already know the labor market is weakening in the US. People already know the dollar should come lower. So a rise to, let's say, 230 is not going to be out the norm. Best source for breaking news. I guess I like to use Bloomberg. I've always used it. I've used it for the past 5.5 years now. So yeah, I always use Bloomberg. A good one, I guess people have like Squawks that you can pay for. They're also pretty good. What's other ones out there? Reuters is another free website, which if I show you, it is this one. Reuters is also pretty good. I'd recommend them. That's free. But I just generally use Bloomberg, to be honest with you. They may not get it up like the instant it happens. That's why people pay for Bloomberg terminals. But at the end of the day, I'm not interested in trying to catch the reaction move. I'm more interested in trying to catch the aftermath. What is going to happen after the event? That's what I'm more interested in catching. Yes, that is true about the new Fed Chair Bassett. He is on the dovish side. That is correct. So people know that likelihood of the FOMC pointing more dovish, i.e. more rate cuts in the future, is quite likely. And what do the markets do? They trade that expectation. Why December has low liquidity? Which months? Obviously, think about the month of December. It is Christmas. People go on holidays. So generally, you do see less liquidity, I guess, or less volume. Around August as well is similar. It is the summer holidays for the Northern Hemisphere. And as a result, people go on holidays. It's the same scenario. And the markets kind of go back to normal liquidity volume around sort of mid-September. When people come back from holidays. So that's generally the reason why it happens. And then after that, outside of that, every other month is pretty much the same. You then have certain days like bank holidays, like we had Thanksgiving last week, for those who celebrate it. I hope you had a good Thanksgiving, but similarly there, markets pretty much move nowhere on Thanksgiving. When you have May bank holiday for the UK, London session shows no volume. So it's pretty much just whenever there's holidays or whenever there's like Christmas periods or summer periods, for example. So let's have a little look at what else we got. Friday. Now, obviously, normally we would have NFP because it's the first Friday of each month, but it has been delayed until after the Fed meeting. That's why we have more volatility around any employment data that comes out, because what people want to try and do is they're trying to think, what can we scrape from these datas that can tell us what the Fed is going to do? And we've seen a decent amount already. We've seen private ADPs. We've seen ADP like what we saw today. We saw like data within services PMIs as well, not looking the best. As a result, what people do is then they scrape together an idea and think, okay, probably best then to remain bearish the dollar, because this suggests that NFP, when it is released after the Fed meeting, is more likely to be on the downside than the upside. So people are trading that thought process. And that's all you're doing. Remember, as traders, you're trying to think of what's going to happen in the future. How do you understand that? You just think, what is the data telling us now? And what does this then mean for the future? That's all you're thinking about. So, sorry, but enough of me yapping. If I'm yapping too much, just say it in the chat. On employment change. Now, employment change is generally quite erratic, especially for Canada recently. If we show this bar chart, let me just zoom in a little bit. You can see how erratic it has been. Let's say since January, so very good prints at the start, very poor prints, very, very good print, very, very bad print, very, very good print. Markets don't like that volatility in data. So I don't think we're going to have too much juice to work with, shall we say, on this Canadian print. I think what people are going to be focused on, though, is the unemployment rate, which you can see is expected to rise, and the trend has been going higher. So it is a bit of not a good sign, shall we say. Do you think GA will get a deeper pullback? I actually prefer GA downside. The reason for that is because obviously we spoke about it last week about the UK. It's good in terms of what the markets were expecting. It's a lot better than what they were expecting, but it doesn't change the overall direction for the UK in the future. So yes, the pound might have strengthened initially, and it did make sense because it wasn't as doom and gloom as they were expecting, but people know that in the future, this is just not going to be good for growth. It's just going to allow the BOE to cut by more. As a result, the pound should come lower in the future. If you then pair that with Australia, whose central bank is hawkish, i.e. they don't want to cut rates as much. Their data is okay, is half decent, better than the UK's for sure. In addition, Australia is also going to benefit from higher ES, right? Higher ES. Well, what does that mean? Better stocks, more volatility, more risk on. Australian dollar, risk on currency. So it benefits when you see the S&P move higher. And this all just points to higher Australian dollar. Pair that with doom and gloom in the future, GA downside. What does that mean? Only supply zones on GA. That's all I'm looking for. So I do agree with GA downside. I would like that. Pullbacks, how deep the pullbacks happen, it's hard to say really. Nobody really knows. But you just ask yourself, what is the reason that pullback happened? Is it sustainable? If it's not sustainable, you know you are going to see a reversal. And what you do then is you just wait for the reversal to happen and then you get in. Because you're not trying to guess where the reversal is going to happen. You need to wait for technicals to tell you when the reversal is going to happen. So, unemployment rate, for Canada is not expected to do good. PCE, I don't think it's going to have much movement, to be honest with you, in terms of the dollar. The reason for that is because markets aren't too focused on inflation for the US at the moment. They're focused on the other side of the mandate, which, by the way, if I give you a little bit of education, the Fed has a dual mandate. Basically, they look at two things. So, price stability and maximum employment. So these are the two that the Fed looks at when they want to understand what they need to do with interest rates. So what do? You then look at what is price stability, inflation stability, basically. And inflation has largely, started to turn lower, which is good news. Cool. But we've already had lots of inflation data. What we haven't had is employment data a lot, because obviously the lockdown, the BLS, etc. So that's why there's going to be more volatility around employment data than inflation data, because we've already had a lot. It's not going to be new to the market. Employment data should be new because we haven't had a lot since obviously the lockdown reopened. So yeah, we're probably not going to have much juice to work with in regards to what the data will tell us from PCE. Even though it's high impact, it's about context, and the context isn't there for a lot of volatility. Consumer sentiment, maybe. This used to be a big driver, this one here. University of Michigan inflation expectations, but not so much anymore. Personal income and personal spending, maybe. I mean, the forecast doesn't really tell us too much. I don't think it's going to be that big of a driver, but generally over the last sort of year and a bit, personal income and personal spending has been quite important for markets, because it told us at the time what are people's spending habits like, and then people use that as a gauge on, okay, do we now see more inflation ahead, do we not, and people trade that expectation. So are there any questions on what we've just spoken about? We'll look at some charts as usual. The giveaway, if I just double check what is being given away today, and obviously I'll let you know once I'm told, and then we'll do the giveaway in about 15 minutes or so, and then we'll sort of look at what other people are saying as well. Canada's employment data is mostly part-time. That is correct. So it's obviously, yes, not sustainable because people are, yes, that is correct. Yeah. You obviously want more full-time people than you do part-time. Just think about it from your self perspective. When I was working part-time, when I was at uni, I was always chopping changing between jobs, right? I worked at Asda for a bit. Didn't really like it. I did work at Apple. I left when I went to uni. I didn't work there for too long. Didn't work at Apple for too long. I worked in a pub for a little bit. I didn't really like that. And you can see how choppy that can be from data, right? So yeah, people always want full-time, because if you have a full-time job, you're more likely to sort of stay on for a bit longer. So let's have a little look at some charts. Now, I'll give you the ones I am looking at. And then obviously, if you have any other questions, you're more than welcome to ask them. So AUD USD is one I am looking at. So let's look at the higher time frame. So let's, number one, ask yourselves fundamentals, because remember, fundamentals is going to drive where price is going to go in the future. So if we can have a good understanding of said fundamentals, then we can have a good idea about where price action should be in the future, realistically. So AUD is as follows: hawkish central bank. It will see positivity from S&P, or just higher ES in general. It will also see sturdier yields, because the central bank is quite hawkish. So that's like a pillar of one of their currencies. Data is okay. Basically better than the US is for sure. And then US, dovish central bank expectations. Employment data is not great, and at least showing some signs of issues. You're seeing a lot of wall steepness in the bond market, which basically means lower 2-year front-end rates or yields, which indicates more dovishness, which therefore indicates weaker currency. You're also seeing potentially, I'm going to say potentially, better risk sentiment from Ukraine, because obviously the USD is a risk-off currency. So it thrives and does very well in an environment where there is not that much risk in the market. So does that tell us to be long AUD USD? Yes. What does that mean? Only demand zones. We don't look for supply zones. So now now that we have a fundamental view, and remember, these fundamentals aren't changing every single week. And you might think, oh, I've got to do all of this over again. You don't have to do that. You just have to keep up to date with what the data is saying. If there's nothing happening that week, cool. You remain bullish that currency. If you see a pullback, let the pullback happen. You don't need to rush. Because remember, pullbacks are always going to happen. So you're not going to miss the trade. So there it is as follows. To enter the giveaway, you do have to, as you know, as you're probably aware by now, type this in the YouTube chat, and it'll enter you onto the giveaway. And as today we have an Apex account, a Fanatics, and a 3-month trade Zeller. Those are the three. So in about 15 minutes or so, we'll grab the names, put it into a spinner thing, and we'll see who wins. So we only look now for demand zones, right? So what do? Start in the high time frame and just work the way down the time frame. Ask yourself, are there any demand zones on the high time frame right here? No. And what I'm more so focused on is this leg over here. Are there any demand zones right here? No, there isn't. So what do? We just drop the time frame. 12 hour. Are there any demand zone on the 12 hour? There is. You just mark them out. I don't know. Let's have a little look.
Oops, sorry.
That's okay. 12 hour. So you can see here, if we can pull back that, I don't think we will get a pullback that deep. But let's say we do, that'd be a reason you're entering. And the reason I'll say we won't pull back that deep, in my opinion, because we haven't got a reason for it to pull back that deep. So it's going to be shallow retracements. So let's have a little look. I mean, we do have a little bit of a region here, and that actually does kind of line up with a whole number as well. 65,500, which is also another way you can enter. 65,500. So it lines up quite nicely there with the highs. Then drop the time frame again. You can see that there is an 8-hour demand zone right here. Perfect. Are there anything else for us to watch? There's a 6-hour demand zone right here. So basically, I don't want to mark out all of them because charts will look a bit choppy. You just mark them out as they trade lower. And there's one right here. And I'll just extend that to the line. All we do, right, is this a region of interest. So what I like to do, as you know already, is once we get into that region, we want to see price action turn bullish. Because we don't know where we are going to see a push from. Right? Nobody really knows which demand zone is going to be met. If they did, obviously, they would be the best trader in the world. But realistically, we don't know. So what do? We wait for technicals to present themselves in our favor. As you know, what I like to do, and everyone has slightly different, that's fine. That's why trading is personal. But we wait for a break of structure. So we wait for the lower high to be broken. What do we then do? We wait for the pullback into a demand zone or a high. So let's say our demand zone's here. This would actually be the most ideal one because it's a demand zone. It lines up with prior highs as well. Then we go long. Stops would be probably just below the low there. And then you target a lower high in the trend because you're buying, right? You want to be targeting the highs. So a high of around 66,200, which is that high. And then the one after that would be around 66,300. So really not that much more. And then what would be after that would be these highs here on the left, which would be what? 66,800 right there, as you can see, right there. And that's all you're doing when you're longing. And you're asking yourself, is the reason I'm long continuing? If it is, you remain long and you hold that long. So AED USD, in my opinion, is actually quite a good trade. Now, another one I'm looking at is Euro GBP. We've actually been kind of choppy recently, which is a bit annoying. But let's talk about it. So let's delete and start from the beginning. So with Euro GBP, I mean, right now it's mostly a bit of pound strength that we're seeing, which is fine. We'll leave that alone. We'll let it do its thing. We're not going to battle that. We're asking ourselves, the future of Europe is looking good because of Ukraine, potentially peace deal. Central bank is relatively hawkish compared to the BOE. So that tells us euro, or the central bank's rates, should be higher in Europe relative to the UK, or not in terms of like the level of rates, because obviously the UK is higher. We're talking about the direction of rates, i.e. UK's rate should come lower quicker than Europe's, whose may stabilize or cut by, let's say, one more. Then government, I guess, is another one. Is more stable in Europe, or at least in Germany anyway. What could be another one? I don't know what rate differentials are telling me. Let me have a little look. So let's look at rate differentials, which is a bond market comparison. I'm not too sure what rate differentials are suggesting. See, I mean, rate differentials, they're actually kind of similar. I.e., this is a good comparison for interest rate expectations in the future. So at least on the shorter end, the 2 year. So what generally happens is, if markets are following interest rate differentials, meaning you can use these as targets, right? So right now it's relatively cheap relative to where, only by 50 pips. So it's not actually that much of a big difference. But what we can kind of see is they do generally follow each other, especially in the past. It has followed each other quite closely. So what do? Well, we could then indicate that, if I reset that chart, you could then indicate from a bond market perspective that Europe is doing better. At least yields are moving more in favor of Europe, which is a good thing for investors or investor demand potentially. Let me see if there's any questions. So yeah, Euro GBP actually looks pretty good, and you're just going to do the same thing, right? Start in the higher time frame, look for demand zones. So we did have a demand zone right here that we were looking at initially. Right here, we did actually come a bit lower. I just want to double check if we had a breaker structure. From my memory, we didn't. And no, we didn't close above the high, so it's not a breaker structure. So that's kind of a live example, I guess, of you have to wait for a breaker structure, at least in my opinion. So 12 hour, do we have a demand zone? We don't. 8 hour, we have a very small 8 hour demand zone there. Anything better on the 6? Any better on the 4? No. So unfortunately, not many. I mean, we have this region here. And what I would do, right, is we have come into big highs before. So you can mark out the highs, basically where we're at now, 87,500. Oh, where is this? There we go. 87,500-ish. Looks like it could be bouncing. What we need to see for it to really show that it's holding is we need to see it close above there on the daily time frame. So in a moment, we will start the giveaway, probably about 4 minutes at 10:02. I just want to double check if there's any questions. Can you add into more bits? Yes, of course you can. Obviously, as long as you have the margin, you can do that. Obviously, you don't want to over leverage, but yes, you can always re-enter on the pullbacks. You can definitely do that. Yes. Again, it's personal. Everybody's slightly different. I like to take partials, right? I don't know, let's say we move up to a high. I'll take partials out, wait for the pullback, and then I'll re-enter if I can and try and get into another long while still holding the initial long from the original entry. But I remove partials because number one, at that point I'm risk free. But then number two, you have better margin to play with after that. Same thoughts on Eurodollar as, yeah, pretty much. Yes, pretty much. What do you think is the lowest time frame for demand zone? Right, this is a good thing. The lower the time frame you go, the less strong that zone is. Why? Because on the higher time frame, you have more data. You can see that more demand came through during those 8 hours. More demand came through during those 12 hours, that daily demand. Whereas before, if you look at, let's say, the 15-minute, there hasn't been that much data. So it becomes unreliable, in my opinion. So that's why I always try and use the higher time frame to find a demand. The lowest I will tend to go now is around the 1 hour, but I will only use that after we see a break of structure out of our higher time frame demand zone. So yes, that's why I only use high time frame to figure out where are we going to see a reversal from the higher time frame. Do I trade gold? Yes, I do. Only when it can be bothered, to be honest with you. Gold right now is a bit on the choppy side. We did actually reject from this demand zone, which was on this 6 hour, as you can see, and the 4 hour. So we rejected from there. And fundamentally, anyway, it does kind of point higher. So I'm still looking for upside on that. In yields comes lower. That's good for the bond market. That's good for gold. Dollar comes lower. It's good for gold. The only kind of thing that is pushing back slightly on upside is better risk sentiment. Higher ES. Ukraine are getting a bit better. That's the only thing, in my opinion, that's pushing back on it. What's your target for Euro GBP? Good question. So let's have a little look. So basically, for an entry, anywhere between now where we're at to this demand zone is good for an entry. That doesn't mean you just buy. You have to wait for some sort of bullish price action to form. You don't want to catch a falling knife. So target-wise, what you do is you just go on the high time frame and you look to your left. So you look initially at the highs here, so round it to the next whole number, 88 initially, and then 88,500, which is that high up there. Then if you zoom out a bit more and look to your left, you can see around this high. Have we tapped into that already? Yes, we have. So back into 89 whole would be a target, which is just above those highs there. Do you use currency futures? No. A good way to understand market pricing, that's the only way I would use futures. I don't trade futures. But the best way I would use it for is forwards rather than futures. Forwards rate or the forwards market can give you a good idea on whether or not something is priced in. So, for example, if you believe that the futures market, or not the futures, but the FX market should be at, let's say, GU 130, but futures markets are, or the forwards market is at, let's say, 1.28, you can see that there's a bit more upside on the forwards, which can drive the actual spot price as well. Or at least it creates that element of demand, and that pushes currencies as well. So you can understand whether or not something is priced in or not by looking at it, but that's about it. Basically target the next highs. Yeah, if you're buying, you target the highs. If you're selling, you target the lows. That's what you do. So entries wise, if I just get sent that list of entries, we'll have a little look at that. And then obviously the way it works for those who haven't been in a giveaway before, we'll get spin the wheel names, which is this one. It might have added the last ones. Yep. So let's delete this because that was last session. And then what generally happens is we chuck it all into this. It spins. Obviously there will be a bit of delay between me waiting for that person. But what happens is if once you're selected, you put into the YouTube chat that you're here. And then after, within 24 hours, you open up a ticket on the Discord, and then your details would be given to you basically, or at least we'll tell you how you can get those details. So let's have a little look. Do I look at open interest? Yes, you can look at COT data for sure. You can look at forwards and COT data at the same time. Yes, they're both good indicators of market pricing, or at least the forward, how much are priced into currencies relative to where price action is. That's kind of how I used COT data. So here are the names. The best, the first one is for, where is it? Let me scroll up. This is for an Apex account. Like I said, say that you're here in the YouTube chat, and then open a ticket within 24 hours on the Discord. So let's see, this is for an Apex account. I'll probably wait around 30 seconds just because there is a delay. Let's see, Valorant Clips, good game, and Moments 8317. This is for an Apex account. So say that you're here in the chat. If you're not, you'll unfortunately be removed. But I'll give about 30 seconds to 45 seconds just because there is a streaming delay. And then if you're not here, obviously we'll remove and we'll respin it. So here's Valorant clips and moments 8317 here. Yes or no? Let's see, let's see. Maybe, maybe not. I'll give her maybe, I don't know, another 20 seconds or so. Valorant Mathematics. Oh, that's not the same person unless one of the mods in here they can figure out. I'm not sure if that is the right person, so we'll have to wait and see. But this is all the list that was opened, or you opened a ticket to join. When I asked for the list, that's what I was sent. Random clips. Yes, perfect. You are here. There you are. So, congrats. You are here. So what you will do then is open a ticket in the Discord, and then within 24 hours, please, ideally. And then you'll get sent your details when we are able to give them to you. So perfect. You're here now. Amazing. Let's remove you from the chat. Congrats. That's for an Apex account. Make sure you open a ticket. And then we will look at the next one, which is for a funded next. So this is for a funded next account. Let's have a little look. Yes, that is true. We've had people before who have used many different accounts to enter. And unfortunately, they were not given the details. So yes, we've had that before, which is a bit unfortunate, you know, but it is what it is. We can't really stop people from re-entering multiple times, but if we do catch you doing it, you will get removed pretty much. So Prince Ahmed, F7R, are you here or not? So this is for a funded next account. And then what we're going to do as well is if I can open up this over here, which is what's the date today? The 3rd, isn't it? Don't know. It might be this one. Yeah, we'll open up this one. Why not? We'll have a little look at that. We'll have a look at what JPM is saying. So Ahmed F7, are you here? You are here. Perfect. Amazing. So let me just double check I have removed you. It seems as if I did. Perfect. So yeah, congratulations. That is for a funded next account. So this is now for a 3-month TradeZella subscription. So let's see. Darkened Tales Whitey. If you are here, amazing. If not, we'll obviously have to remove you, and then we'll respin it for a trade. This is a 3-month TradeZella subscription. So, are you here or not? Let's see. But yeah, we'll have a little look at this PDF after we finish this, because they do talk about it. Actually, Goldman as well. Let me open up that Goldman doc, which is this one. And they do talk about AUD NZD. Somebody asked that before. And AUD NZD is one they did mention. So they are looking for downside on that, by the way. And we're going to have a little look at, that's Darkened YouTube. Darkened Tales YouTube is the name. So are you here? Yes or no? Let's see. You can scroll back on the... let me just scroll forward. So it's Darkened Tales YT. It was the name. Yes, you're here. Perfect. So, amazing. I don't know why that keeps popping up there, though. I do keep minimizing it, but it doesn't like to do it. So, yeah, perfect. Darkened Tales YT. You are here. Amazing. That's for 3 months TradeZella. Perfecto. Now that's out the way. Let's have a little look as to what some of the big guys are saying. Now, obviously, as you know, you should never use these as gauges for your fundamental direction. What you use it as is, I don't know why why is it all up there? What the hell? What you should be using it as is a way to understand what you're looking at is correct. I.e., are you looking for, let's say, I don't know, bearish USD And are they looking at something similar? If it is, that's a good thing because you're now looking at the same things that these guys are looking at. So somebody asked me about AUD NZD at the start, and if you're still here, this will be a good little doc for you. So let's have a little look. So what they say is convergence. So convergence, I'm sure people know this term, is just like, think of it as like closing the gap. So let's say RBA is up here, RBNZ is down here. Convergence is just the gap closing. So what they're actually looking for, and we did speak about this last week as well on the RBNZ, is that they were quite hawkish. We saw a lot of New Zealand dollar strength. But what this does do now is it changes the mindset of the market on the New Zealand dollar. Because what they were doing and what they did last week was they were insinuating that they're no longer looking to cut, which number one is obviously good for the currency. But in addition to that, markets were so short the NZD anyway initially, which made sense. But we are now starting to see a little bit of change in the data. Whether or not that continues, it remains to be seen. Because we have to see more data. We haven't got any really until a while because their data is released quarterly. But if it does point to further upside, New Zealand dollar can strengthen by a lot. Especially against those where it's weakened the most against. So let's say NZD USD upside would be a very, very good trade because NZD USD on the chart, if I show you, let me delete this over here, NZD USD, I am looking for longs on this by the way, has sold off so much on the daily time frame, right? So the upside is far greater than there would be as if, let's say, NZD CAD or NZD versus the yen. You see what I mean? There's not going to be much movement there because those charts already moved upwards. You want to be selecting charts where there's been more sells initially, and you know in the future that there should be more longs. So you're trading that big gap of pricing, which is generally what you should want to do anyway. That's how you catch those big swings. So we're still looking for longs on, like, say, NZD USD. Just waiting for those pullbacks. You can see we're not really having any, which is fine. We let price action do its thing. We don't want to chase the trade. Let's wait for the pullback. Pullbacks always happen, remember. So what Goldman's saying here is they said they've seen a resurgence in Q3 sales, retail sales, coupled with RBNZ's hawkish stance, meets the bar for turning more positive on the NZD. The view is probably best expressed versus the AUD, as AUD NZD is driven more clearly by relative monetary policy. What does that mean? Just what we spoke about earlier, about the difference between the RBA and the RBNZ. That's the relative monetary policy. Where previously, the RBNZ was very, very dovish, so they cut rates a lot, very, very aggressively. You know, they were very much doom and gloom. Then suddenly now we start to see that switch. Whether or not it continues is a bit difficult because we haven't had any data after the RBNZ. But what they're trying to say here is the RBNZ becoming more hawkish, which closes that gap. And that's what you're trading. You're trading that close of the gap between the RBA being up here versus the RBNZ being down here. And now what they're doing is they're slowly starting to creep up. And that's what you're trading, that direction. So Australia saw an upside surprise in inflation in its new monthly CPI. But we do not see this as a headwind for AUD NZD downside. The inflation data do not clearly argue for a shift in guidance by the RBA, given their already more hawkish stance, including long NZD CAD or long NZD USD. So what they're doing here, right, is ultimately we think positioning for the NZD strength makes sense given green shoots. What they mean here, the green shoots is just the direction of the data. Yeah, and broadly net short positioning, which is here. So what they're saying here is most people are broadly net short the New Zealand dollar, which did make sense. But because we're seeing that switch, people are now starting to go long to New Zealand. And you can see that they're targeting 111 on the downside, which is about 300 and something pips away. So waiting for a bit of a pullback and then a nice sell-off. I don't know if we're not pulling back into any supply zones, which is a bit unfortunate right now. You came back into that high, that's about it. Yeah, these lows, it's not really something I'd want to be looking at. But what we'll try and do is if we break and close below this low here, which seems to be the case, go on the higher time frame, and you can see that there is a 8-hour supply zone right here. And then we trade from that supply zone, and we target the first initially low here at 113, and then around 112 to 111 is where the next lows are right here. And that's it. So apart from that, yeah, that's pretty much AUD NZD. I think it looks pretty good for downside. There's a lot of movement there, and you can capture a lot. I think you could actually just trade it once, and you could probably pass your funded account on it, as long as you don't over leverage, of course, which you should never be doing. But you generally should be trying to catch these swings, because you can pass accounts in a couple of trades. It's about quality, not quantity. So JPM, yeah, people just join for the giveaways. It is what it is. There's just nothing you can really do about it. So trading, let me see if I think they did talk about AD, didn't they? Yeah. So what they are looking for is long AUD USD from JP Morgan. And what they're saying is, who is Louise, who's the one who made the stock. She said, I'm core long AUD USD as the Fed pricing moves to a rate cut next week, while the pro-cyclical setup further supports the view, which is what we were talking about how like high ES, better risk sentiment. That's all a very good environment for higher AUD USD, or just stronger AUD in general. Stronger, more potentially stronger NZD as well, which is something to definitely to look for now. I would say normally the CAD, but the issue is CAD is not good. So, fundamentally anyway, so it doesn't have much upside in my opinion from a core cyclical perspective. How strictly do you use fib? Fib wise, this is kind of how I do it. So I just use it as a rough gauge for pushes. So for example, let's say I entered here earlier, or yesterday anyway, and we are in decent move at the moment. But what I would do is, let's say, I don't know, we start pulling back now. What you want to be doing is you want to be marking at the low to the high of the move, as you probably know from basic fib stuff. So let's say it starts pulling back now. You mark at the higher low to the high of that move. And what I generally do is I just look to buy anywhere between there. 50% discount is good. So between 50 and 88 is good in my opinion. It's not like I use that as a be-all and end-all, because sometimes I would enter above the fib. And there's reasons why you do get very shallow pullbacks, because the fundamentals are so lopsided in one direction, it's a bit difficult to gauge that there's going to be deeper pullbacks. So like, for example, there was AUD NZD on the upside when there was lots of issues with New Zealand, right? All of this long on AUD NZD. You can see how very shallow the pullbacks are, right? Minus that one. But generally very, very shallow. Very, very shallow. Why is that? Because fundamentals are so in favor of being long. They didn't want to sell an AUD NZD, or they didn't want to exit a lot of their longs that were in. So the pullbacks are going to be very shallow. So if you can understand that, I don't know, let's say, for example, there's going to be very one-sided positioning for, like, let's say, I don't know, the Fed is very, very dovish next week. The pullbacks are going to be probably a little bit on the shallow side. Markets are going to trade like AUD USD much higher, like what we're seeing now. Like the pullbacks are not that deep, because it doesn't make sense for the pullbacks to be that deep, because it's so one-sided at the moment. So yeah, I'd use it as a rough idea of, where is a good pullback, but it's not like I'm saying I have to buy between 50 and 88. Ideally, yes, but not always, because obviously markets are forever changing, and what you have to do is adapt to that. So lastly, another good trade is probably dollar yen at the moment, actually. So I looked at this 8-hour supply zone right here, because remember, we only look for sales, right? We only look for supply zones. So I think dollar yen actually has a decent amount of moves now for downside. We'd have confirmation of how much more downside would be dependent on when the BOJ talks at their next meeting. But if they're quite hawkish, which they have kind of insinuated, then dollar yen has a lot more downside. So what do? We just apply the same logic. We only look for supply zones. So let's say, I don't know, we pull back to that 4-hour supply zone. Is there a 12-hour? No. Or a daily maybe? Nope. Ugh, that's annoying. Yeah, I don't want to go too low on the time frame. Yeah, I mean, it's a bit difficult. The only region I would be watching is around that 155.6 level, which is right here, for a pullback. And then sell-wise, you just target the lows, right? Because you're selling. So target one could be that low there at 153, round it to the whole number, 153.500. That would be a target. And the next ones would be all of these lows down here. And all you do is you just hold it. And if it makes sense to hold it, you still hold it and just get in on the pullback. I personally know how to make... Okay, perfect. I don't have large amount of money in order. There's no prop firm for binary options. A binary options is just one of those things. It's just very, very, in my opinion, unpredictable. I don't know any... Yeah, I don't know anybody that... Or any prop firm that does binary options, personally. What trades are you in? I am in a long and AD NZD, but that was all the way back here. So I longed it in June, earlier this year. I should have the screenshot in the Discord, which is over here. I am pretty much going to be exiting that though. I did take partials obviously on the way up, so it's not like I'm holding the full position. But I like to use these big swing trades to test my patience, number one. But obviously number two, to test my knowledge of when can I identify switches and trends. So open, if I can open this up, this one, which is ADNZD. Another one I'm in is Eurodollar longs. I am looking for dollar yen shorts. I am long Euro New Zealand, which I will be probably exiting quite soon actually. Another one I'm in on the higher time frame anyway. Trying to think, I'd have to double check MetaTrader. Let me double check now actually. So wait, why isn't that opening? Open link, there we go. So this is the long. This was back when I just took the screenshot. So that was from here on 077, and fundamentally it made a lot of sense to hold it. But now that we start to see that switches, we're now looking to exit. So I just want to double check what ones I'm in. So yes, a lot of them I will probably be exiting quite soon. So I am in Euro New Zealand, which as I said, I will probably be exiting. GCAD is a long that I'm in, which it's a bit of a tricky one that actually. I'll hold on to it for now, but I wouldn't be surprised if I exit it. And Eurodollar, that's the only ones I'm looking to swing at the moment. What will be correlated pair for AED, NZD? I don't look at correlations. So I don't look at, like, say, I don't know, gold goes up and Swiss does this, or USD CAD does this and dollar Swiss does this. I don't look at that. I look at the reason why things are happening. So if they make sense from a correlation, perfect. But like, it doesn't, I don't use that as a gauge because, I don't know, for example, dollar Swiss does this and USD CAD does that. But I'm like, fundamentally, it makes sense for this pair to go up, but this one to sell off. I don't want to have that contradiction. So I don't use those correlations personally. So when will I exit? I'm assuming you're talking about the other pairs. Probably quite soon. I will probably wait for maybe a bit more on the data front. I could probably exit now. I don't think it'll be too much of a big deal. AUD, RBA next week. And then do we have NZD data? Doesn't seem like it. I've taken partials on the upside anyway, so it's not that big of a deal if I exit a bit on later on. But what I use these big swing trades for is mostly because I want to test or try and test myself to think, when am I going to exit fundamentally? And that's what I did. And that's what I was doing anyway. So like here, right, if I show you this screenshot, which is over here, and I'll show you kind of the reason why we was looking at this target. All you got to do is just think, what does it make? Let me see. Can I open this up? I'm not sure, but if you go into the Discord section of the thing, we was looking at 116 for AED NZD, and all it was simply was previous highs. You can see previous highs here on the left lined up with 116. Perfect. So we target that high. We just got lucky that it's kind of started to reverse there, but we just ask ourselves how much more downside it has, which in my opinion looks good. What concepts do you use? Supply and demand, something simple. You don't need to overcomplicate charts. If you keep it simple, you tend to see the best results, to be honest. So what that means is you'll put a trade on the opposite direction. I'm now looking for AED NZD shorts, yes, over the short term. The reason is I'm not going to get into like a big swing trade yet, or what I do is there's two types of trades. There's a swing and there's a tactical trade. This is more tactical. So for example, I'm trading it tactically because RBNZ is more hawkish. So I want to trade that hawkishness, but I'm not too sure on can it switch to a fundamental swing yet because we haven't had more data after the RBNZ. If it confirms that what they are doing is correct, then it will turn into a fundamental swing and we'll just hold that swing. But if it doesn't, then we will exit it at, let's say, the low, for example. So yes, there's two types of trades. But apart from that, everybody, I think as myself, there's a few big swing trades to occur, especially these ones here. You can, and NZD USD as well, upside. There's a lot of trades here for you. What we need to do is just wait for the pullbacks. And there will always be a pullback. It's not a matter of there might be a pullback. There will be a pullback. It's just a matter of when. So I don't know if there's any other questions. Apart from that, everybody, have a good rest of your week. And I'll, of course, see you next Wednesday. Take care, everybody.